Good afternoon, everyone. 1/19/2013. This is for the Trader Network worldwide, and that all people from Titan Trading and BSI Capital, which is institutional people, and other people that are in the Trader Network can all be updated as we're going into the calendar earnings starting on Tuesday. There won't be any trading on Monday, but here's the Nasdaq Composite, and here's what I'm going to show you of what this looks like is that it's potential breakout. But remember, the calendar earnings are going to come and hit these big tech stocks. And yes, we've had good data. This is the movement that we're focusing on right here, is where this monthly top is. But let me just tell you that we're getting into the overbought area and we can continue to go up. But what we're dealing with is this red bar right here. This is this red bar. And that we close at 31.34. 31.66 right here is going to be a wall of resistance. This is all standard stuff. The Trader Network has the market maker platform and it has its numbers. Here's 3,500 right up here. That's if we can break above it. But listen, here is 3,300 and it's going to fluctuate. But we're right here and we're going to have to get up above 32.55, which is roughly 100 handles up to this resistance level. It's all going to deal with this area now in the Nasdaq. And we go back to these years where we were back in year 2000. And we've come all the way back up to this period of time. I was trading the markets every day. I was short the Nasdaq back then, and we'd put in all-time highs at 5,048. But this is that upper end of this resistance level that we're finally approaching back in these back in this era 13 years ago. It's been 13 years that we've been in a major long-term bear with bull runs within the bear, but we have got great possibility. But remember, we got the earnings season and price volatility is going to increase. So this is going to be the wall of resistance levels that we have to come up to, and it's going to be right here. If the market wants to look past lower tech earnings, is that we're going to come up here on this monthly level. And we're right here. We're slightly below here. But here's that monthly bar and these resistance levels that we're going to have to come into play here. And they go back, like I say. This is back in year 2000. This is when the bear started. It's been around now. It's the 13th year that it's starting. And here we are right now where we had made highs up here at 3,200. And we had some big reversal tops. Right now, the Nasdaq Composite on the monthly level is about to break through that and then come up and test this high reversal here in 2012 and the all-time highs right here on this monthly level. Earnings are going to be extremely volatile. There's going to be a lot of upside and downside in the overall market. And here's what the Nasdaq Composite looks like. It's taken a long time to get back here. If we go back to the period of the financial crises, listen, from where the financial crisis was, we're well above these areas on a monthly level. That's our new support level right here. We're and we're above those. And we always said it could happen. And we've always stuck with it. Because does the market want to break this 13-year downtrend that it's starting in January? And we are above certain levels within a bear and bull mathematical equation that says that the long-term bear has been short-term broke. And it's taken this 13th year from the 2000 top, and we're starting the 13th year. We've gone through 12 years of bear with mini bull rallies, but within the longer bear. And every bear market has to come to an end at some point. They only can last for so many years. So it's a very exciting year Earnings are going to have to grow, but earnings could grow sideways and you could still continue to go higher. And the tech earnings, if they're willing to look past that as to what those earnings would look like in the back half of the year, is buying dips. And we got lots of money on the sideline. The bond bubble, the bonds in a bubble, all that money in the bond pit comes over into the equity side. And that's how we're going to get up here now. Now, because of all that money on the sideline and they didn't perform in 2012, they let these rallies go by. Can the earnings season be a little bit weaker, but looking past those multiples to go higher? Absolutely. What we look for in breaking multi-year bear trends in the broader markets from a mathematical equation. So the bear has a mathematical equation, the bull has a mathematical equation, and we back the two out, and we got our numbers. We know what it looks like. We've called the tops and the bottoms. There's going to be pullbacks. There's going to be volatility. Lots of things are going to depend on the government, but this baby is set to try to go higher. And it's all this is the we have these 3-month corrections. And 2013 too will have pullbacks that can be bought, and you can make money selling short and going long. Taking advantage of the quality earnings season is buying the dips on the good quality leadership stocks. We have a list of them, and we're good at it. We are market makers, but we will teach you retail risk management. That's what you're going to be able to relate to. Our backgrounds are different, but we can still help you as far as applying the risk management. The most important thing is, how do we break that 12-year bear that had many little bull rallies with corrections, but where does that multi-year bear, and we talked about it all last year. And we got up here and we had a nice big pullback from 3,200 all the way back down here. It looks like the monthly low here on that pullback was, let's just take a look. That was, the low was 2810 on the Nasdaq composite. So that means that all the stocks in a broader Nasdaq composite have been moving up in the month of January. And we're getting top end at resistance levels with earnings volatility. There will be a lot of headlines. We got to clear the 2012 top at 3,200 now. And we closed at 3134. That's only roughly around 70 handles higher in the Nasdaq composite to get there. But nonetheless, once we hit that area, we're going to have to get up above there, because it's going to be this upper end of this resistance level that will give this bull some weighting from going from 12 years of bear into slight bull territory. And are we able to get out of this long-term secular bear with many little bull rallies over these multi-calendar years? I think we're getting closer. There's a lot of proof that has to happen. Some of it's going to be in your government, monetary base. There's lots of things that come into play. And the thing about it is, it would be great to get people off of the sideline. The money that's in the bonds got to return to equities. And because if they got to return to equities, that means it's possible that some of the bad earnings reports will be some great buying opportunities, and that the broader markets can look past this quarterly earnings, look through them to get them higher. And we have to close above that 3,200 level here. Once we start doing that, we really get over here in the juicy part. But each level that we go higher, it's going to get us a little bit more overbought. And these are going to be the areas that we're going to be focusing on right here. So we can see on the monthly level here that 3372. But we can also see where the monthly sell wick was, right above 3,400. And this is all back in these calendar years. Let's show you the calendar year again. This was 10/1 of 2000. This big bar right here was 11/1 of 2000. And this is going to be, and we're traveling up through here. This is where we start to challenge where the bear started 12 years ago, going on 13 years ago. And this is that monthly bar. This is the one here. To our whole trader network worldwide, please pay attention to me. Please pay attention to me. Because we are about to make significant progress, but we will have some reversal volatility and certain passes at these resistance levels, and buying the dips will be the right thing to do because the market will look past the calendar earnings. And we're about to break these trends. And I will let everyone know on our worldwide dealer network, all our traders that are under us or with us are going to be totally updated, and there will be some volatility on the Nasdaq Composite multi-year highs.